What do these full year numbers tell us about how the business is performing? And are you happy with the progress that you're making against your strategic plan to date?
Yeah, great progress against the strategy we set out 2.5 years ago. And that was based on 3 core principles: the idea of making our customers' lives easier every day, selling great quality products and services at fair prices, and very importantly, to do that whenever and wherever our customers want us to do it. And against that backdrop, first of all, at the heart of the business is the food business, and we've invested in now the quality of 3,000 products, mostly in added value fresh foods, which is great progress. We've simplified the pricing in our food business, so we run a lot less promotions and we have much more everyday low prices, and of course we've become more competitive in the marketplace. But we've also grown the development areas of the business, like the groceries online business or the convenience store business. We've had a fantastic year in clothing and general merchandise, and it's been a pivotal year through the purchase of Argos and Habitat. So we now have a mechanism to grow our clothing and general merchandise business even faster, and of course access to an online world which is growing very rapidly as our customers' habits change. So we're very pleased with progress, but equally it's a challenging environment and we need to keep accelerating the rate of that progress.
But why are profits down on last year, and how much of this is down to price investment and cost price pressures?
There is a lot of cost price pressure in the marketplace, and it's important that we remain competitive, and that's the main reason why our profits are down year on year. We've also given our Sainsbury store colleagues a 4% pay rise, which has impacted our profits, but overall we're pleased with progress.
What trends are you seeing in shopping habits at the moment?
Well, our customers' lives are changing very rapidly, so within the food business we still see a trend towards people shopping around. When they shop they tend to buy less, but of course also the world of online is developing very rapidly, and that's one of the reasons why we bought Argos and Habitat, because they're very well positioned in that space. So the groceries online business in Sainsbury's has grown pretty rapidly, and something like 18% of the group sales were in the online world. We also know that things like click and collect are very important to our customers, so whether that's in the clothing and general merchandise business or indeed the food business. And the other thing that's important to customers is they want things really quickly, and so the speed of service, whether that's same-day deliveries within the supermarket chain or click and collect within the supermarket chain, or fast track within Argos, where you can order something and pick it up within 4 hours. These are all very important developments for our customers.
And you're accelerating the rollout of Argos digital stores. Why is that, and what's your assessment of how Argos is performing?
We're really pleased with the performance of Argos. We've currently got 59 stores operating in Sainsbury's stores, and because of the success of those stores, we're confident we know what we're doing, and we'll roll out 250 stores, and as you say, faster than we originally envisaged, which means that we'll complete the programme within 2.5 years, and therefore deliver the synergies about 6 months earlier than we originally thought we would. The other good news is that in the stores that have been trading for more than a year, we're seeing 20 to 30% like-for-like growth, and we also see a halo benefit, a sort of 1 + 1 equals more than 2 benefit of the Argos stores in Sainsbury's stores.
And are you concerned that that's distracting you from the challenges in your food business?
Not at all. We continue to see food at absolutely the heart and the core of the business. As we look forward, we plan to relaunch something like 40% of our food categories over the next year. And we've also trialled things like sushi, and we're rolling that out into more of our shops, and even something like Patisserie Valerie, which we've got trialling in 12 stores, might be an opportunity for the future. So we continue to look to innovate and add value to our food offer overall.
There's a lot of choice for customers in terms of where they shop. But why should they shop at Sainsbury's when it comes to food?
Well, we think we offer a unique, differentiated offer. So the food that we sell, we think is better quality, and our customers tell is better quality than our competitors. We need to remain price competitive, and we also run great shops. So our customers will tell us that they can buy things in Sainsbury's that they can't buy elsewhere with the ranges that we sell. And they also know that when they come to Sainsbury's, they'll find what they need. So our product availability and our store standards are also very high. I'm very proud of the work that our colleagues do week in, week out to deliver those store standards. We consistently come out as the best operator in our industry in the UK.
And the bank continues to perform well. What ambitions do you have for this part of the business?
The bank's been through a significant period of change with its replatforming. We completed a big step on that journey in the latter part of last year. So the bank now has a very solid platform on which to build, and as we look forward, we've already launched or relaunched our insurance products, home insurance and car insurance, and that's an avenue for growth in the future. We're pretty good at travel money, but again, we think there's opportunities there. We've put more ATMs into our shops, and we've just launched mortgages. So again, that's a potential avenue for growth in the future. And as we look forward, we believe that there's an opportunity for strong profit growth within the bank over the next period of time.
Will you be revising your cost savings targets in the light of the progress that you're making in Argos synergies?
Well, we've committed to £500 million worth of savings over the first 3 years of our plan, and this is the final year of that. So we will have delivered 130 million of savings in the year we've just completed, and we're confident we'll deliver a further 155 to make up that 500 million in the year that we're now in. And we've also talked about the fact that we'll deliver another 500 million above and beyond that from the year that begins in the next financial year, so for the next 3 years after that. So we're still targeting those savings. We've got a track record of delivery, as you can see, and we're pretty confident we can land that second tranche of 500 million. But also above and beyond that, the impact of the Argos synergies, of course, as we've talked about earlier, is that we'll bring forward the £160 million delivery by 6 months, because we'll roll out the 250 stores faster than we originally envisaged.
And what have you done on the dividend front this year?
So the dividend is 10.2p over the year, and in the final dividend we're going to pay 6.6p, and our dividend policy remains unchanged, which is 2 times dividend cover. And so again, if you were a shareholder for the last 5 years, you would have received almost 70p in dividends over that period of time. So we've consistently paid dividends, and as I say, it's based on a policy of 2 times cover.
And what's the outlook for the next year?
The market continues to be challenging, and we'll continue to do the things that we've set out to do already in our plan. So whether that's investing in the quality of the food that we sell, in the prices of the products that we sell, doing a brilliant job of growing our convenience and online business, our clothing and general merchandise business, and of course now with the added topspin of the rollout of the Argos store. So we're confident about our future. We're getting on and executing our plan, and we'll see where that takes us over the next year. But we can't get away from the fact it's a tough market, it's a tough environment, and it's a tough consumer outlook. So our job is to do a brilliant job of serving our customers through our colleagues week in, week out.